Good morning and welcome. You're watching Market Cafe on ET Now. That's Ankita Saxena, my co-anchor, and I am Harsh Saita. We obviously take you through all the news that's buzzing, first in global markets and then into domestic and what could buzz through the day today and the reasons for that. So we'll take you through all of that over the next 1 hour. So stay tuned, sip your coffee while we take you through all of that. Quickly first, Ankita, tell us what's happening in global markets. How have US markets closed?
So, Harsh, two things. Strong set of economic data coming out of the US, good GDP numbers, good earnings, and also the jobless claims came out below expectations, which is indicative of a strong labor market, which also means it paves the way for further rate hikes. So yesterday, fourth quarter gross domestic product, which is the sum of all goods and services produced for the months of October to December period, rose at an annualized rate of 2.9%. Now, economists surveyed by Dow Jones had expected a reading of 2.8%, which means that it came out better than expected. The consumer spendings, which accounts for about 68% of the GDP, also increased 2.1% for the period, down slightly from the 2.3% in the previous period, but still very positive. Now, a separate economic report also highlighted a strong and tight labor market. Weekly jobless claims fell by 6,000, down to 1,86,000 for the lowest reading since April 2022 and well below the 2,05,000 Dow Jones estimate. So a strong labor market as well. Now, on the back of this data, stocks rose. The Nasdaq Composite jumped 1.7%. The Dow Jones Industrial Average rose 205 points, while the S&P 500 gained 1% in trade. Now, also strong results from Tesla gave the tech-heavy Nasdaq and the electric vehicle stocks a big boost. Tesla jumped nearly 11% after posting record revenues and solid earnings. So a good, strong set of economic data that's coming in from the US markets, but also it's something that the Fed will be keeping an eye out on because it paves the way for further interest rate hikes. Now look at the European markets. European markets also advanced yesterday, building on the positive momentum seen in the previous trading sessions. The Pan-European Stock 600 closed up 0.4%, DAX was up 0.3%, FTSE up 0.2%, and CSE was up more than 0.5%. So that strong global handover coming in, Harsh. What does the crude look like?
Well, yes, on the back of that, crude also picked up a couple of percentage points of gains. We did speak, in fact, on Wednesday, if you recollect, Ankita, that crude going down was not, really sustainable over the longer term. On the back of China reopening, that's a very interesting piece that's playing out. US is again adding to its stockpiles. That will keep pressure on oil prices while going down. There will be lots of pressure. And of course, the third piece now coming through is that the US economy continues to be strong and resilient. Of course, that paves the way for rate hikes and a possible slowdown in the future, but that's not currently being a big cause of concern. At least that's where oil is concerned. We're looking at oil above that $81 a barrel where WTI is concerned. Brent is well above that $87 a barrel, in fact 87.6 as we speak, both gaining even today after gaining a couple of percentage points yesterday. But let's quickly take you through all the events to watch, and Ankita generally does that, so I'll hand it over.
Well, Harsh, the biggest event that happened was in the US yesterday. The US economy, like I said, finished 2022 in solid shape, even as questions persist over whether growth will turn negative in the year ahead. Fourth quarter gross domestic product, which is the sum of all goods and services produced for the month of October to December, rose at 2.9% annualized pace. Consumer spendings, which account for about 68% of the GDP, increased 2.1% for the period.
Well, we've been talking earnings. Let's start off. Intel shares slid by as much as 9% in extended trading after the chipmaker issued fourth quarter results that failed to meet analyst estimates. This is fourth quarter calendar year 2022. And they also gave a weaker than expected forecast going forward. Intel's revenue in fact declined 32% year over year in the quarter ended 31st December. And Intel also said investors can expect more pain in the first quarter of calendar year 23. For at least the first half of the year, Intel will deal with persistent economic headwinds, is the statement that's been put out.
And Hasbro said it would eliminate around 1,000 employees' positions and warned of weak holiday quarter results. The layoffs come as the company seeks to save between $250 million and $300 million annually by the end of 2025. Now, Hasbro said it expects fourth quarter revenue, which includes the holiday season, to reach $1 billion, down about 17%.
Well, and Elon Musk said a Chinese automaker is likely to be the closest competitor to Tesla, while stressing the company is winning in China right now. Tesla has a number of challengers in China in the EV space, including a slew of startups such as NIO, Xpeng and Li Auto. Tesla's biggest rival in China, of course, right now is the Warren Buffett-backed automaker BYD.
And luxury group LVMH's sale rose 9% in the fourth quarter. This was aided by shoppers in Europe and the United States splurging over the crucial holiday season. The gains also helped partly to offset COVID disruptions in China. LVMH is regarded as the bellwether for the wider luxury industry and does not give a breakdown for its brands.
And switching to Japan, Toyota's chief executive will step down as head of the company his grandfather founded. The 53-year-old chief branding officer and president of Toyota Motor Corp will take over from April the 1st. Toyota's current chief executive led the company for more than a decade.
And shares of BuzzFeed Inc. jumped on reports of a deal with Meta Platforms. The company reportedly plans to use artificial intelligence to personalize and enhance the digital media firm's online quizzes and content. Reports also said that Meta was paying BuzzFeed millions of dollars to bring more creators to Facebook and Instagram.
Well, with that, we'll slip into a very short break. Of course, more on the other side. Mind you, budget in a few days. We'll focus a bit on that as well. Welcome back. You're watching Market Cafe on ET Now. We'll quickly move on. The President has approved the conferment of the prestigious Padma Awards. A total of 106 Padma Awards have been announced this year. Padma Vibhushan has been conferred posthumously upon late Samajwadi Party founder Mulayam Singh Yadav, musician Zakir Hussain, ORS pioneer Dilip, among other notable names. Meanwhile, Padma Bhushan has been conferred upon industrialist Kumar Mangalam Birla and social worker Sudha Murthy. The President has also announced 91 Padma Shri awardees this year, including late market veteran Rakesh Jhunjhunwala and actor Raveena Tandon, among others.
And moving on to the biggest event coming up next week, the budget. A weakening of the dollar index is a good news for several factors in the Indian market, but how will the budget be this time, and when is the rupee expected to strengthen against the dollar? With all these questions in our mind, our editor Nikunj Dalmia, ET Now's managing editor, comes in with his take on what the budget holds. Let's take a look at what he has to say.
The dollar index in September was at 115. 115 has become almost 101. You go below 101, an important technical level for the dollar strength would be taken out, which necessarily means that in the short to medium term, if the dollar remains weak, rupee surely will strengthen. Other emerging markets will be in focus, and it's a matter of time that money will come back into India as an emerging market basket. So structurally, the weakness in dollar index is always good news for us. Structurally, the weakness in dollar index is always good for commodities. Structurally, the weakness in dollar index is something which has always led to emerging market outperformance. So the template, I think, is getting set that if the dollar index remains weak, emerging markets as an asset class will outperform. Within that, India has underperformed this year. But I think that is pure rotation which is going on, because India did very well last year against all global odds. I guess right now other emerging markets are coming back, and I guess somewhere if if we come on the right side of the budget event, if there is no large changes in the taxation front, if the government is committed to really stimulate the economy, and if the fiscal numbers is something which do not disturb the market, then I would seriously make a case for a sharpish rebound in the market post Feb, considering that the global scenario and the dollar index is favoring us. That's my call, that budget, if this is a no harm budget, trust me,
We're in for some upside.
we are in for some upside, because the weakness in dollar index means good news for emerging markets. Then why are we underperforming? Because we did very well last year. So we have to catch up.
That's a very interesting take coming in from our managing editor. But we'll quickly move on. The next 10 years belong to India, says veteran banker KV Kamath. He says there are several pockets of high growth opportunities in the country, and he remains bullish about the prospects for the fintech space. Here's a sneak peek of that conversation.
Barring some external shocks which could be geopolitical in nature, or it really could be because of energy and high inflation, this decade belongs to India, and you're quite certain and confident about it?
Yeah, I am absolutely certain about it, Nico. And the test was the last 3 years. If we could not have managed ourselves during those last 3 years of enormous distress, could not have reset our minds, could not have pumped in technology into what we are doing, I think we would have. I would not have had the confidence to say this. But having done all those things, I can confidently say that the next 10 years are ours to win, and we will win those 10 years.
Well, with that, it's time for us to slip into a short break. You don't go anywhere. There's lots more news, lots more stock-specific news on the other side.
Welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through. Of course, US markets were largely in the green, but we're seeing US futures reverse up a little bit of that, largely flat, but in the negative at the moment is where the US futures are at. The Dow futures are down around 1/10%, the S&P 500 down around 1/3%, and the Nasdaq futures down over 0.5% as we speak. Quickly taking you through Asian markets. Well, we're looking at largely green in Asia. We're looking at the ASX 200 up around 1/3%. The Nikkei on your screen is up around 1/10%. The Kospi also is up around 3/4%. The Shanghai up 3/4% as well. And let's look at the Hang Seng, probably the only index which is down at the moment, down around 1/10%, but largely flat nonetheless. We're looking at gains on the SGX Nifty, which is coming off, currently still holding above that 18,000 mark, the SGX Nifty. It's up around 1/3% as we speak, looking at a positive start, hoping for a positive start to the end of this week. But we'll quickly move on. Ankita.
Well, the FPO of Adani Enterprises, which has garnered much controversy of late, is opening for subscription today. The FPO worth 20,000 crore rupees will remain open for bidding till the 31st of January. Now let's get to know more details about the latest FPO on the D Street from my colleague Somit. Over to you, Somit.
If you look at the FPO market, there is a follow-on public market in India since 2013, that is in the last 10 years, only 3 companies have come out with an FPO. Now, back in 2013, it was Power Grid, which raised close to 7,000 crore rupees, of which some of it was offer for sale, while the remaining, a very small portion, was a new fundraise that the company had done. In 2020, Yes Bank raised close to 15,000 crore rupees. The entire amount was a new fundraise. And Patanjali, which was back then known as Ruchi Soya, in 2022 raised close to 4,300 crore rupees. Now, this was again a new fundraise, and the entire amount was used by the company to reduce their debt. Now, if you see the Power Grid FPO that came in 2013, Back then, the FPO price was at a discount of close to 7% to the current market price. Back then, the issue was subscribed nearly 15 times, and since then, since the FPO price of 90 rupees that the company had decided, the share prices of Power Grid have jumped more than 2.5 times, and this is excluding the dividend announcement that the company has done. Now, Yes Bank FPO that came in 2020, in fact, the price of the FPO was at a sharp discount of nearly 50% to the current market price back then. The FPO, however, was undersubscribed, was just subscribed 0.9 times, and compared to the FPO price back then, if you see, the share prices have jumped nearly 45%. That is from 2020 till now, the share prices have jumped nearly 45%. And when it comes to Patanjali, which was back then known as Ruchi Soya, the FPO price was at a discount of around 20% compared to the current market price back then. The FPO was subscribed nearly 3.6 times, and compared to the FPO price back then, that is around 650 rupees, the share prices have risen close to 90%. Now, coming on to the latest FPO that is started for the public shareholder public today, that is Adani Enterprises FPO. Now, the Enterprise FPO is worth nearly 20,000 crore rupees, and this is the largest FPO in India. The issue price, despite a 15% fall in the share prices, we have seen the issue price is still at a discount of close to 5% compared to the current market price. Over and above this, the retail investors will be getting a discount of additional 64 rupees if they subscribe to this FPO. Now, how will the company use these funds? Now, they're going to use the entire 20,000 crore rupees for the capital expenditure purpose and to reduce the debt of 3 units of the company. Firstly, that's the green hydrogen, then there's the airport business, and the road infra project business. So the entire amount will be deployed towards these 3 businesses. Now, the gross debt of the company is expected to come down by around 10% post the fundraise, and the equity dilution is expected to be around 5% post the fundraise. Now, do remember that these 3 businesses are the key businesses for Adani Enterprises, because analysts also assign nearly 85% of the value to these 3 businesses, that is the green hydrogen, airport, and the road infra business.
Well, thanks so much for that, Somit. But stay with us, because we understand that Airtel has hiked its minimum recharge plans, and it looks like some more telecom tariff hikes are on the way. So tell us what this means.
Currently, if you see, Bharti Airtel has hiked the minimum recharge plan in 18 of their circles to 155 rupees. Earlier, this minimum recharge was in the range of around 99 to 111 rupees, but now the minimum recharge for Airtel plans in 18 circles of the 22 circles present in India would be 155 rupees. Now, if you remember, in November 2022, the company had first introduced this higher minimum recharge plans in only 2 circles, that was Haryana and Orissa, and in this week, they have rolled out this minimum recharge plan now in more 16 circles, taking the total to around 18 of the 22 circles present in India. Now, what should investors understand from this? Firstly, if you remember, Jio's minimum recharge plan stands at around 155 rupees for 28 days, and Bharti earlier had the lowest plan of close to 99 rupees. Now, because of this, Reliance Jio's subscriber addition had slowed down, given the fact that Bharti Airtel was allowing subscribers at a lower end. Now, if there would have been another tariff hike on the street, Reliance Jio would have wanted Bharti Airtel to firstly reduce or increase their minimum recharge plan to 155, and that's what Bharti Airtel has done now in 18 circles. And to pave the way for another big tariff hike on pan-India basis across all plans, the minimum recharge plan needs to firstly go at a considerable level of 155 rupees, and that is what Bharti Airtel has done in 18 circles. And as soon as they roll out this on pan-India basis, that is on the remaining 4 circles also, at least investors can expect another tariff hike coming soon. That is what even analysts believe on the street. Now, do remember that these 18 circles contribute nearly 36% of the subscriber market share for Bharti Airtel, and the 4 circles where the tariff hike, where the minimum recharge plan has still not been increased, are Gujarat, Kerala, MP, and Maharashtra so far.
Well, thank you for that, Samit. Now it's that time of the show when we give you a list of stocks that you need to watch out for in trade today. Now we have Ashesha with us in the studio. Ashesha, tell us, what are the stocks that you have your eye on today?
Hi, good morning. So earnings season is on in full swing. So we have a whole host of companies that will be in focus on the back of their results. First up, we have VIP Industries that will be in focus. Revenues for the quarter gone by stood at 526 crores. An uptick of 33% is what we saw on a year-on-year basis. Margins, meanwhile, have declined a tad bit. They've come in at 13.8% this quarter, versus 14.3% same time last year, indicating a contraction of nearly 50 basis points on a year-on-year basis. CAT also reported its numbers and will be reacting to those today. Revenues came in at 2,727 crores, up 13% on a YOY basis. Profit after tax, meanwhile, declined by a whopping 300% on a year-on-year basis. Company reported profit of 35 crores versus a loss of 20 crores that the company had reported same time last year. EBITDA margins have come in at 8.7% versus 5.6%, indicating an uptick of nearly 300 basis points on a year-on-year basis. Tata Elxsi will also be reacting to its numbers, where EBITDA margins have expanded a whole lot. They've come in at 9% on a quarter-on-quarter basis. The company has also crossed $100 million run rate in the quarter gone by for the first time ever, and attrition rate continued to decline, and this was the third consecutive quarter of decline as far as attrition is concerned. Lastly, Sterlite Tech will also be in focus. Board of Directors will be considering fundraise via rights issue, so keep an eye out on Sterlite Tech as well in today's trading session.
Well, thank you so much for that, Ashesha. We'll quickly move on. There are a couple of top pharma companies which have come out with earnings on Wednesday. We saw Cipla and DRL, and as always, Ashesha is taking a look at all of the brokerages and what brokerages are saying on a couple of those earnings. So Ashesha, take us through all of that.
Absolutely. So Dr. Reddy's and Cipla, we have a couple of brokerage notes coming in on them. So Dr. Reddy's reported its numbers post market hours, and it was a good set of numbers, much ahead of what the street was working with. We have Morgan Stanley, which has come out with a note where it is maintaining its overweight rating on Dr. Reddy's with a target price of 5,099 rupees per share. They say strong third quarter results were largely driven by Revlimid. They expect the momentum to continue for the next couple of quarters. Core business, however, is stable, and M&A is the core focus area given the strong balance sheet Dr. Reddy's has. Meanwhile, Citi has also maintained its buy rating on the stock with a target price of 5,170 rupees per share. They say Dr. Reddy's reported yet another strong quarter. Recovery in Russia, CIS and PSAI segment were another notables in the quarter gone by. They continue to remain constructive on Dr. Reddy's. Cipla reported its numbers during market hours on Wednesday, and on the back of that, we have a couple of brokerage notes. First up, we have Credit Suisse, which is maintaining its outperform rating on Cipla with a target price of 1,300 rupees per share. They say we saw strong growth trajectory in the US in the third quarter, and they expect this to sustain with an improving margin profile. They like Cipla due to its evolving US sales mix. Macquarie, meanwhile, has also maintained its outperform rating on Cipla with a target price of 1,235 rupees per share. They say third quarter EBITDA and PAT missed estimates by 6 and 14% respectively. However, FY23 EBITDA margin guidance of 21 to 22% has been retained by the management. They are lowering their EPS estimates for the coming quarters, and Bernstein has also maintained its outperform rating on Cipla with a target price of 1,233 rupees per share. They say they missed estimates, however, margins improved this quarter and they are expected to improve going forward as well. India and US launches remain the key driver of growth for Cipla, and they also say company remains on track to achieve 21 to 22% EBITDA for FY23. For now, Bernstein has maintained its outperform rating on Cipla with the target price of 1,233 rupees per share.
Well, thank you so much for the detailed analysis, Ashesha. Outperform is the word coming in from major brokerages on Cipla, but let's just quickly take you through what the scorecard looks like for Cipla. Now, Cipla reported a 10% year-on-year rise in its consolidated net profit, which came in at 801 crores, a tad bit lower than estimates. Consolidated revenue from operations was also saw marginal growth of a mere 6% at 5,800 crores. And the one positive, though, is its margin, which expanded by 176 basis points to 24.23%. The sharp fall in the input costs contributed to improvement in the operational performance, while the raw material costs have also dropped by 15% on a year-on-year basis.
Well, yes, and meanwhile, in other news, of course, we have Dr. Reddy's Lab, which also declared its Q3 numbers, and they seem to have beaten analyst estimates on the street on pretty much all counts. The drug maker has recorded over 6,000 crore rupees in global sales. EBITDA margins were up 29% compared to the 22.8% last year, and their US business recorded sales of over $300 million. Let's listen into what the management had to say on that one.
We should. It's normally like happening in those kind of business model. It will fluctuate from a quarter to quarter. At the same time, we are set to launch, give or take, many products, and about 30 or so, as well as to maintain the traction of the current product. The generic lenalidomide will continue to meaningfully contribute also in the next coming quarter. So with the understanding that it may fluctuate from quarter to quarter, we will continue to grow in the United States.
Well, some more pharma earnings coming in. Torrent Pharma also reported its Q3 earnings. Let's quickly first go across to what the scorecard looks like. Now, if you look at the sales, they were up 18.2% on a year-on-year basis. The PAT was up 25% year-on-year. EBITDA came in at 34% up year-on-year. However, the margins were largely flat at 29.7% on a year-on-year basis. Now, if you look at how the earnings panned out, what is the health of the company? Healthy trends are coming in across India, Brazil, and other emerging markets. The quarter-on-quarter recovery from Germany and in US is pretty stable, and the management is quite upbeat on the growth outlook.
Well, thanks so much for that, Ankita. We'll quickly move on. Couple of auto majors have come out with their numbers now. We have Bajaj Auto, and let's quickly talk about what brokerages are saying about those numbers. We have Jefferies with a buy at 4,300 a share, and we have Citi with a sell at 3,500. Let's quickly take you to what the commentary is saying. Jefferies seems to suggest that all-time high EBITDA is good despite the weak demand, so that's a positive. Q3 volumes have actually fallen 17% year-on-year. EBITDA to vehicle ratio rose 18% quarter-on-quarter. That's again a positive, and it's at an all-time high. That's also what they've noted. The domestic two-wheelers are recovering from an abnormal cycle, and exports are also facing macro pressures. They believe that the company expects an improvement in demand by mid-2023, which will, of course, increase their EPS, and they've hiked their EPS estimates by 2 to 6% all the way through 25. Quickly moving on, Citi also reported or suggested a sell on Bajaj Auto. What they believe is that the Q3 results were strong and driven by robust beat in terms of realizations. The outlook, though, appears to be more positive on the domestic market, and the management also noted that there are some inflationary pressures. That's what's keeping Citi largely negative on Bajaj Auto. Quickly moving on, Tata Motors. Nomura has a buy with a target price of 508. You can see on your screens. Jefferies is with a buy of 565, super bullish, and we have JP Morgan with a neutral rating at 415 rupees a share. That's the target prices of those three. Nomura believes that the Q3 margins have improved across segments. JLR, of course, has benefited from the rising chip supply. The CV strategy is there to reduce discounts and is working quite well. And the management of JLR in terms of Q4 volume may be slightly better. That's what the management has said of JLR. Quickly moving on, Jefferies believes that there's going to be a big turnaround, or that's already happened in Q3. Q3 EBITDA has gone up quite strongly, and the order book is quite strong, and on the back of that, they've given a solid buy. JP Morgan believes that the free cash flows have improved sequentially. That's a positive. And they believe that the India CV business has surprised on margins. They also believe that the management indicates a similar free cash flow range for JLR in Q4, which is also a positive, but they are neutral on the stock. I'll quickly move it back to Ankita.
Well, the countdown for the union budget has already started, and here's a special segment that will help you apprise with all the budget jargons. Listen in to former Rajiv Kumar, former Niti Aayog Vice Chairman, on what the fiscal and the revenue deficit are. Listen in to what he has to tell you.
We have the total expenditure of the government, and then we have the total revenues of the government. Now, normally the revenue should be equal to or more than the expenditure, which is what we try to do in our families, that our expenditures don't increase, don't go beyond the revenue that we have. If the expenditure is higher than the revenue, then we have to borrow. The extent of this borrowing is called the fiscal deficit. Fiscal because all of this is public fisc, and when the expenditure becomes larger than revenues, then it is a deficit, and that's called the fiscal deficit. Similarly, when the revenue expenditure, that is the expenditure all on, as I said, salaries, pensions, supplies, etc., is higher than your current revenues, which is your revenues which are tax revenues, etc., then that's the revenue expenditure. Now, what happens is, what is said is that if your revenue expenditure, if your revenue deficit is 0, or if you have a revenue surplus, then you use some of this to finance your capital expenditure, right? So, normally the good thing should be for revenue deficit to be 0, or there should be a revenue surplus, but overall there can be a deficit because some part of that revenue is being used to finance capital expenditure.
Well, with that, we're completely out of time on this edition of Market Cafe. Of course, thanks so much for watching from Ankita, myself, and the whole team that puts this show together.